Good morning, welcome to the market view for Friday the 13th. Yes, it's that ominous Friday the 13th. Also ominous for the markets as well. Last night, Bank of England hints at possible rate rise. So last night, Mark Carney hinted that we could be close to an increase in rates based upon the data that's been released recently. So maybe he's gone back and had a look at his notes from August last year when he said that if the unemployment rate dropped below 7%, he would consider raising rates. So whether somebody's brought this to his attention or not, I do not know. I suspect not. It's just a delaying tactic, and of course it's the last thing that Cameron will want as an election next year. And certainly wouldn't want the voters starting to feel the pinch with an increase in interest rates. So let's have a look at the effect upon the pound last night. You can see that after hours he spoke and the market shot up over 50 pips, more likely to be around 70 pips, and then has continued to rise this morning. Yesterday, the market didn't do an awful lot, and then the retail sales from the US were slightly disappointing. The market dropped and then retraced and moved back to the upside. Just going back to this, notice in this bar here, notice how the volume completely disappeared. So the selling that they saw in the first 30 minutes yesterday afternoon had disappeared completely there. So the markets moved back to the upside, and we're currently trading above the 169.50 level, heading back towards 170. So let's have a look at the daily chart. So in the daily chart, we can see we just blasted straight through all of the retracement figures that we have in here, and we'll actually be through the one to the recent high as well. So if we go from the high down to the low, we'll actually be through that, which we can see because the high of the overnight bar is more or less at the levels to the left there. So let's just remove all of this as well. So we're back to the April highs. Let's just throw in a zero extension there. And let me just drop these bars down a bit so we can see where we're going, and then just do this as well, just so you get a better idea of where we're heading. So we're heading to the 170 level, and I wouldn't be surprised if we don't actually see this taken out today. So keep this one in mind. On any pullback, any potential signals, expect the market to move higher, and it's probably going to happen first thing when the traders come in within the next half an hour or so. Next half an hour to start the move, and then obviously then move the market up towards that 170 area. Let's have a look at the news, see what we've got here. We've got PPI for the US at 130, and prelim UOM consumer sentiment is going to be out at 255. Now, yesterday in the Dow, let's just go to the implied volatility first. This started to move higher, and the reason this started to move higher was that the Dow had a down day. And the reason the Dow had a down day is due to Carney's comments, because when interest rates go up, the stock market becomes less favorable because people can see, well, not in these days, but in times gone by, more security by being in the stock market, guaranteed return, than having to risk their money in the market. So that's why the Dow had a down day yesterday. Otherwise, we'd have probably seen a continuation of the retracement, not correction, that we marked up yesterday. So in the Dow chart, you can see we're down yesterday 109, down 100 the day before, and the market's up on the overnight at the moment. So this is where, if this is a genuine move, then we'll expect the market to come back towards 76, and if it closes above, then the recent high, and then off towards the 17,000 if this is just a temporary shakeout. Now, looking at the volume, it's increased a bit, but it hasn't turned the price bar red because it's not as significant as we think. So this could just be a shakeout in this market at the moment. So let's have a look at the overnight market. This is a daily chart of the overnight, and you can see prices are moving back to the upside. Let me just change that for you. You can see there. Let's just shrink this. So there you can see the market moving back to the upside from late last night, 21.45, and now the market heading back up there. So in the daily chart, this is what it looks like. The low of last night is also below the low of, is higher than the low of yesterday as well. So it's trying to drive back to the upside. So it's a case, as far as the Dow is concerned, just to recap, how far it will retrace back before it then gives the indication that it is genuine selling around, that it is genuine weakness, and that's down to the 62.76%, where we could enter this market for a short. But that's down to what we actually see over the next couple of days. So I'll keep you posted with regards to this. Right, well, that's it for today, for the week. It's heading into the weekend. Let's hope the weather stays as nice as it is at the moment. That would be very kind of it. So have a good one. As ever, thank you for your support. It's very much appreciated, and also for watching.